everybody. Welcome to the Trading Market Technicals Morning Call video for Monday, August 13th. Another grinding consolidation day yesterday. And if you look at the chart here, 10-minute chart, I just kind of brought this in just to show you where we've been for the last couple of weeks. Actually, the last Friday, from Friday on, we have just literally grinded in a channel up and down, probably a good 4 or 5 handles in the S&P. Friday with the late day burst up, which is very common on extremely light volume. This is the summer doldrums, so that's to be expected. But if you look back here, we did the same thing. We dropped down a little bit, gapped up again, and then starting a whole new trend. This is the first time in a long time, actually, that we finished up where we rallied all 5 days. Now, whether it be small, a couple points here or there, but the Dow did put a lot of major indices did manage to rally the first five for the whole week. Actually, this is basically week number 5 in this little rally from June 4th. So I think we are getting a little bit stretched, as I kept mentioning. Problems are not going away; they're still out there. Japan is slowing down at a greater pace than expected. I kept mentioning that for the last couple of months. Europe is still a disaster. But as of right now, Wall Street doesn't really care. They're actually, as you know, trading the wall of worry, and that's fine until something gets caught. And then when Europe does come out with something really bad, you have a huge crowded trade on the long side. Everybody be looking for the exit doors, and that's not going to be pretty when that does happen. But until then, markets are extremely complacent. I'll show you some indicators again. And I just wouldn't want to be stuck in the middle trying to get the exit doors. And that's why I mentioned we have a lot of followers here that are investors, swing traders. Please hedge yourself with your portfolio, whether it be buy some puts. They're cheap right now, and I would definitely not let that. You wouldn't want to be riding a 150-point S&P move lower. Now, I'm not saying it's going to happen right away, but a couple days up, 6 days down. It could be hardening. So, just keep that in mind. I do consider risk to be high at the moment because of the fact what's going on in Europe. We can easily drive prices down hard, and you want to get too complacent. The market is very, very complacent, and that's what scares me. This whole move up has been on extremely light volume, right? We are trading in the summer, so there's something really to take note of. But things do change quickly, and at the moment, we want to trade with the trend. The trend is our friend, obviously, and we're in August. So August is going to be the slowest month of the year, aside from the last 2-3 weeks in December. And earnings season basically winding down. There's really nothing out there today. There's no economic data, so it's going to be all about technicals. I wouldn't be looking to push anything, adding a bunch of trades, and I would keep your portfolio light, especially when you're trading. During the day, there's nothing wrong with putting on a few positions if you feel like you caught some stocks. And we talked about a couple of sectors. I've been talking about banging my head against the coal sector. We had a great day on Friday, trading a lot of those coal stocks, and there's a lot of room to the upside. So just want to keep that in mind. But look, the market. I'm surprised. Do I think there's any upside? I had a lot of emails. I do think that we could probably run to that 1422, 1425 area in the S&P, which that'll give us another, 15 points or so. But I want to make emphasis that a lot of the market groups are doing well, but what's continuing to give us market divergence, transportation sector, copper, and I'm going to show that to you right now. And that needs to either turn around quickly or sideways trade and then start to move a little higher. But for the most part, there is light volume. I'm not going to keep pounding the table on it. I just said use caution. That's all I'm saying, because the volume is so weak. News does trump the charts, and it could change so quickly. So when in doubt, as you know, my always saying is cash is a position. So let's go right into the charts, and then we'll go from there. Like I said, it is going to be quiet for the next couple of weeks, guys. I might have some repetitiveness in my morning call, but again, just bear with me until we get through September here. But 10-minute chart, as you can see, nothing really happened. We gapped lower, then we had that big number, that Draghi speech, and then boom, we're back up again here. But I wanted to show you is this is a really good chart. It's ATR 14, average true range, 14-day. And as you can see here, when the average true range starts to rise, the market starts to sell off. Average true range rise, market sells off. And then average true range rise, the market sells off. Now, and obviously it goes the same as the market is rallying. Now, we've been wedging here. This is a big wedge, and I want you to realize we're continuing to move lower in the ATR. So that's showing extreme complacency here. So just really, really use caution. And again, guys, I've seen this many a times. It literally catches everybody by surprise because they're so complacent, and that's when a lot of people lose money. So just really use caution here. S&P above the 50-day moving average. Look at this. We're back up at these areas here, like I mentioned to you, and this is 80% above the 50-day moving average at the whole S&P 500. That's a lot. I mean, so that's something that I want everybody to be aware of. Okay. Let's take a look at NYMO. Hasn't been really telling us much. New York Stock Exchange, McClellan Oscillator. As you can see, we've been hovering back and forth, negative 30, plus 30 here for all of half of June and all of August. Not really telling much. But what does tell me is that if the market wanted to move lower, there's plenty of movement to the downside, and as well as the upside. So we're really neutral here. Not telling you much, but does state that we do have some room if we wanted to move higher. All right, our VIX telling us again extreme complacency. Look at this at the bottom of the range. Wouldn't be surprised if they dip them lower and then it breaks out of the Bollinger Band to come back in. That would issue a buy signal to the VIX and would be a sell signal to the equity markets and commodities. So I'm watching this very closely, especially during the day. Now the other two areas of divergence. And before I get into it, let me show you the SSEC. Shanghai was down 1.5% last night. So it's not really mustering any type of rally. As you can see here, we had that double bottom. We broke. We're back up again, which is fine. We are oversold, and look what happened now. Now we're getting into overbought territory since we had this move. And to me, this looks like just a basic bear flag right now. So we'd like to see the market come back in, shop around here, and then break this congestion area. And then I think you have something here. And if we do, if we see China start to improve, and if they can dodge a bullet, then I think we definitely have some upside potential, and we can have a nice, decent rally going into the new year. But as you know, seasonality trends, it's notorious to have sideways, slightly lower congestion in August. And then, as you know, we do have that market pullback, generally, usually anywhere between the end of September, October, and then November-ish, somewhere around there, we rally into the new year. That could still happen. Markets are holding up really well. But just, use caution here, like I've been mentioning. Now, here's a couple of our divergences here. We have the S&P just kind of drifting higher, low volume, and here's copper. Copper leads. Copper is not leading this time. So, and again, it doesn't have to, but it's pretty obvious here that copper is lagging. It's actually very weak, and this is an industrial metal, so copper here is something to really take note of. And the other one is the transportation sector. And I showed you this the last time. Continue to make higher highs. We're making lower lows. This is not good. And you could even draw a little line here. We have this large symmetrical triangle. I'll show that to you in the other indices on the charts. We're going to get into them now. Okay, technicals, trading market technicals, S&P 500 chart. We're back. I put a Fibonacci retracement. Remember, we did have this long-term trend line, which now we're sitting above it, and we're consolidating. So it actually is very bullish. So I don't want you to think that I'm looking for the market to sell off here. It is bullish. I do think risk is to the downside, but that does not mean we can't test this 1424 area. It acts like a magnet all the time. So I wouldn't be surprised if we have a couple more days, 2-3 big days, and then the market starts to sell off. I could almost bet you that once we get up here, you're going to have a lot of selling come up here, at least to this area, and maybe pull back down into this somewhere around that 61.8% retracement. Now, if we get back into this rising wedge and we start breaking the wedge, and that's going to take a little time, right? We have a lot of support here. Then, the first objective would be the 200-day moving average, and then, of course, the June 4th low. So that's something that we'll be keeping an eye on closely. And here's that 15-minute head and shoulders, like that I was mentioning. We're still here. We start to really get above this area, this head area of 1407, 1410. This is just going to invalidate. We did have a small head and shoulders, 15-minute, so it's really not as important, but just something to take a note of. Look at the volume in the spiders, because I use the spiders as to gauge volume. Actually, nothing absolutely happening here, except that we keep continuing to be above this rising wedge channel, and which is fine. I mean, again, it is constructive, but if you look at it, we're sitting above the channel, and look at the congestion area that we have here. So this is two big areas that we're going to be looking at to see if we can get up here. Market is bullish, no question about it, and if you're short and continue to be short, you're fighting the trend. You don't want to be in. You don't want to be able to do that. You're not going to make any money doing something like this. Transportation, IYT, ETF, head and shoulders we mentioned. We also have the symmetrical. Which pattern is going to work out? We don't know. The market does look very weak, though, as you can see. And if the transports start to falter and they start really breaking hard, I can almost guarantee you that this market will go lower. And this is the transportation sector. It's the leader of the sectors that we follow, and it's something that's really concerning to me, as well as copper, as well as the big cap, as well as the big cap tech as well. Now, IWMs, Russell, same thing. We did break above this line. We're just hovering above the line here. Look at the volume, extremely low. We're overbought, so wouldn't be surprised if we get some sort of a pullback. And again, a pullback is healthy. I mean, even if we decide we pull back, 30, 40, 50 S&P points on a low volume pullback, that's very healthy. And I could say that that's something that would be looked to buy. Now here's the SMHs. As you can see here, we're wedging higher. We're in this channel, and we just keep breaking higher. Now, eventually this thing is going to break. It just can't go up and continue to go up. And as you can see here, we had this little thin zone. If you look at these volume profiles, nice little thin zone area. And then as we get up here, this 35 area is going to be pretty heavy. So I wouldn't be surprised if we pause right up in this area. Take a look at one more chart. The Qs, same thing with the Qs. These are big cap tech, but look at the volume. Volume is just non-existent. Yes, it's partly doing that we are in the middle of the summer, but still we should have better than average volume if this move is for real. So that's something I just wanted to point out to you guys. All right. Sorry about the repetitiveness, but again, we want to make sure that we keep watching these indicators to give us some sort of clues to let us know that, hey, this market may have may be looking to get some sort of a pause or reversal. Again, it is a little bit long in the tooth. And the last thing I want to say is that, guys, again, while you're trading intraday, if you're day trading and you can't find anything, things are really slow, again, cash is definitely a position. Just keep that in mind. All right, guys, I'll talk to you tomorrow. Have a great day today trading. Take care.